I do think there's information content there. And look, I come back to the whole thing that all of this, I think, is a plan to foment fear in the banking system so that we'll all gladly, happily accept the CBDC. It is coming.
In today's video, Mark Yusko, the founder, CEO and CIO of Morgan Creek Capital Management, discussed about the Fed raising interest rates and impact on all markets including crypto, the crypto bear market, and if we've hit the bottom on Bitcoin.
It's on the margin, pun intended. On the margin, there are a few that said, whoa, banks are less safe. I need to be my own bank.
Yeah.
And there was literally some demand for BTC. Yeah, I think much of the big move this year was short covering, right? So you had the big Binance short liquidation early in February, March. You had more short covering around some kind of news around the liquidation of the Mt. Gox stuff that actually didn't happen. And so that was part of it. But then you had some real demand, right? I mean, MicroStrategy, Michael Saylor was out buying, and that was real. But I do think, and actually the topic of my presentation later today is about the banking crisis of 23. And I go back throughout history of the banking crisis from the 1800s to the 1900s. And what's interesting is if you would have said, we're going to have 3 of the largest bank failures in history this year, which was not on anyone's bingo card, by the way. If you would have said that this would be the largest year for bank failures in history. Now, part of that's inflation adjustments, but even inflation adjusted, it was bigger than 2008. Because what people forget is 2008 was really just whammoo. And then there were a bunch of smaller banks in 9, 10, 11 that failed. So there could be another wave of failures going on. And we've seen that with PacWest and Western Alliance and things like that. But if you would have said that was going to happen, you would have thought, oh my God, Bitcoin's going to crash. Instead, it's up meaningfully. And I do think there's information content there. And look, I come back to the whole thing that all of this, I think, is a plan to foment fear in the banking system so that we'll all gladly, happily accept the CBDC that's coming. And, that's the sinister Saturday part that I'm sure you don't want to talk about. But there's going to be so many types of bodies floating. And, commercial real estate, it's coming. And, that was part of this presentation I've done. They tried to label Signature Bank a crypto bank, right? To shut it down. No, crypto's like this much. It's all real estate, and they are going to get destroyed, right? Those loans are going to get destroyed. And so there's no way the FDIC could bail them out because they don't have any money. In fact, the announcement today, they're going to charge the big banks billions of dollars to try to replenish the FDIC coffer because they burned it all up on FRC. And it's bad. And, we talked last week about 350 California, $300 million asset that the bids are 60 to 70. That's someone else's asset, right? That loan is someone else's asset, and that's going to get vaporized. Remember back global financial crisis, all roads lead to Jamie Dimon. Jamie decided not to foreclose on loans that his friends had. And you could do that, I guess, if you're the boss. And that is likely going to happen again, right? You're going to see selective enforcement or selective calling. And look, if you're a small regional bank right now, you're done, right? You have no friends. There's not going to be anybody to come rescue you. If you're a small community bank that, lent to all these nice local businesses, Nope, they're not going to help you. But if you own trophy assets that, JP Morgan get their mitts on, guess what? They'll help you.
I guess the worry would be the market's really being held up by a couple of mega cap stocks. So
lack of breadth is death, right?
Yeah.
Hashtag for it. Lack of breadth is death to bull markets. And now it can always go longer than you think. It went longer than we thought it would in 2000, and then it crashed 84%. And it went longer than we thought in 2007 and 8, and then it crashed, 60 some odd percent. This time it's gone crazier than ever, and it's really because of this, passivization, make up a word, that, every 2 weeks, people's 401ks and 403bs automatically buy the S&P 500 because they don't have very many options in their 401k and 403b, and you're forced, right? Because these are dumb strategies, meaning rule-based, not unintelligent, but they're dumb and they're not allowed to think. And so they have to buy Microsoft, they have to buy Apple, irregardless of the weighting. The fact that Apple now has negative net income growth is insane, that it's trading at, 26, 27 times. Microsoft invested $10 billion in OpenAI, and their market cap's up $500 billion.
Yeah.
Because now they're an AI company. I'm like, really? Have you used their bot? It's not great. I mean, this AI thing it's a mania. And it's a mania that I think we're going to look back 10 years from now and go, oh my God, what were we thinking? I mean, because the numbers are so big. I mean, think about that. $500 billion of market cap on the delivery of nothing. OpenAI is still hemorrhaging cash. And I did a chat GPT the other day. And so I'm playing around with it. And I asked it to write about something I knew something about, right? My wife and I did a scholarship fund at Notre Dame. I said, describe the Hesper Yusko Scholars Program. And it said, the Hesper Yusko Scholars Program is a competitive scholarship program at the University of Notre Dame in Indiana. Okay, good, check. Funded with a generous donation from Frank H. and Joan K. Yusko. I'm like, no, not named Frank. My wife's not named Joan. They conflated 3 families. Frank is Frank Eck, who gave the baseball stadium and the alumni center, and Joan Kroc gave the Peace Studies Institute. So none of us are related. So that was the first problem. And then it went on to describe the program, and it messed up the specifics on that in terms of what the scholarship was. Like, if you can't even get facts right, is it really intelligent? I don't know. And so I think this is a true mania. In fact, now Meta, I guess, is going to shed Meta. Are they going to change their name to Meta AI? I don't know, maybe.
So I think there'll be some overreactions from investors that are very jumpy about this. And I think a lot of people will lose a lot of money, but I think eventually it'll be real.
Oh, no. I'm not saying AI is not real. I think, but also it's not new. Right? It's been around since 1950. And in fact, chatbots have been around for 30 years. And look, when you type a prompt into ChatGPT and it starts flowing, it's hypnotic. It's cool. It is
hypnotic.
It's actually good. And it goes at exactly the right speed so I can read it, and I can read fast, and it's pretty good. The fact that it's factually inaccurate, that's a problem. The fact that sometimes it goes off on weird tangents. Like I had this debate with it the other day. So I said, is it possible for a human to go to Mars? Yes, it is. Definitive. Yes, it is. And it gave me all the things. I said, okay, you said logistics and re-entry were things that had to be solved. So technically it's not possible for a human. Apologies for the confusion. You're right. It's not technically possible, but it's theoretically possible. And I'm like, okay,
Yeah.
if
Made
it's
some mistakes for
theoretically
me, too.
possible, and this went on for like 4 iterations, and I said, look, if it's theoretically possible, then how do we solve the fact that we can't land on the surface with current technology? What are we going to do? And it was interesting how it actually stopped. It literally said network error, and it stopped. And I was going to post the whole thing, but I decided not to. But it just literally stopped. It just says, I'm done talking to you. So I don't know.
You can get frustrated in arguments.
I
Just
know.
like people.
I know, just like people.
In the
But I
middle of
thought
a
it was-
debate, I'm frustrated.
But
I
I
don't
thought it
want to
was
talk to you anymore.
interesting in that its first response was the bias of, well, yes, it's possible. Like, it's not. It's just not.
Yeah.
And to say it is based on what, everybody's like, oh, we're all going to the moon. We're all going to Mars. We're going to colonize Mars. No, we're not. Now, maybe someday we'll solve the problems and we'll get closer, but you can't. And I just thought it was just a very interesting thing that if the data exists in a certain form, that's the only thing it can rely on. That's what the tool does, right? It doesn't have the sentience yet to intuit, oh, okay, then technically it can't happen. Theoretically, still possible based on our understanding of physics. Anyway, I just thought that was interesting.
And I think if it came down to it, I think the big banks are too big to fail. So what's the incentive? You put your money in the big banks, and then there's a certain amount of defaults when they're small regionals, and then the U.S. has to write a check because the FDIC insurance pool is only $125 billion.
Whoa, no, Michael, we're going to solve it for you. These banks, you can't trust them. Just take this little thing. It's called a CBDC. Full faith and credit. You're good. It's coming.
I really don't like the CBDC idea.
It's coming, baby. It is coming. The Fed is going to save everyone.